Okay, great. Well, it's great to be here. Thanks everyone for joining us this early. Hi Juan, great to meet you. Before we begin, I'm just going to ask Juan to introduce himself and tell us a little bit about himself.
Thank you very much, Mona. So my name is Juan, and I'm one of the co-founders of Keyrock. Keyrock is an algorithmic trading firm, been around in the space for about 8 years, and we do all kind of financial services using proprietary algorithms.
Great. And for those of you who don't know me, I'm Avantgarde. We are a Vault strategist, and we are a curator in the DeFi space. And I'm very excited to be moderating Juan today. When I first met Juan, he told me that he really believed the future was on-chain asset management, and I knew straight away we were going to be friends after that. But I'm curious, you know, sitting in a kind of market-making role in CeFi. I'm really curious to know what you thought, Juan, was the first credible form of on-chain asset management, and what led you to take that view.
So when we start looking into asset management on chain, it did seem like all of the characteristics on how to attract capital were there, and that at the same time, all of the traditional asset managers were just trying to replicate the format in which traditional, hedge funds have been successful, but they were not actually managing to be successful. So I went on this journey on really meeting a lot of managers and interviewing them, and I started to realize that they actually didn't have a lot of money under management, which was actually a very interesting realization. Where at the same time, very inexperienced teams were managing to raise a lot of money on chain. A lot has changed since I started the research. I've recently started to update my understanding on the TVL, on the different Vault strategies, and it's actually going very fast. Like a lot of the teams that I would say 6 months ago I talked with, that were starting to build the first, I would say on-chain vaults for asset management, are now starting to reach 50 to 100 million AUM without much track record, to be honest, which is very impressive.
And why do you think on-chain asset management matters? Why is it important?
I mean, it's all about access, and I think it kind of like depends on the idea. So when you look at all the on-chain protocols out there, I would say in terms of like their set of beliefs, you actually have like two kind of like types of DeFi. You would have everybody that is looking at it as a high volume, low margin business, where it's all about like how do you make something very replicable and then take a small piece of that and abstract value from the system. And then you have people that are more in the camp of long-term wealth creation. So if you think about a business like Pump.fund, it's a great business, but it's a business that is pretty much conscious that majority of the users are going to lose money, which is absolutely fine. And even if you go back to like before crypto, in the space of FX brokerage, majority of the very successful FX brokers were very conscious that the majority of the users would lose all their money, and they were absolutely fine with that. You have a movement now, a lot of DeFi protocols and builders that really believe that it's all about long-term wealth creation. And the reality of it is that over the past 7 years, people have taken a lot of good decisions, but a lot of bad decisions as well. And I think right now that combination of still long-term vision and believe into the industry, but at the same time, realization that you need to be better about risk management and diversification of your assets, I think leads now to this idea that DeFi has to be more than financial infrastructure, has to be long-term wealth creation. And I think that's why this new trend is really starting to take off.
Was there a pivotal moment for you when you saw maybe trust shifting and, really seeing on-chain asset management as a viable alternative to traditional asset management? Was there any one moment that you saw the shift?
Even though I'm not the biggest fan, but I think looking at the spectacular growth of what it was, Athena and Morpho, I think were very big moments. I think looking at both the capacity for Athena to all of a sudden basically have a tokenized fund product and raise billions of dollars without pretty much any real track record, really showcase the power of broad market access that the on-chain ecosystem would give.
That's interesting. I would agree with that actually, because before that you had multiple collateral, and Morpho really helped like fragment the market and segment risk, let's say, which really created nice building blocks for more sophisticated strategies, let's say. More, yeah. What do you think it will take for the sector to really break into the mainstream? Do you think there are still some elements missing?
I mean, I think that for it to really, the assets that are, or the type of exposure that is being created needs to be more diversified. So right now, in the level of maturity of on-chain asset management, where we are now is basically two types. We have what are called, say, beta products. So something that lets you go long on the market with a slight sophistication. There's not that many of that actually. Like, there are not that many places where you can, in a comfortable way, say, I'm gonna go long on crypto, and I'm gonna put my money into this vault. People still just like, let's say, buy Bitcoin and that's it. You know? And then you would have yield. And so yield right now, it's basically the idea that you would build something that is principal protected. So you have principal protected or pseudo principal protected, and that would mean that what people are actually chasing is a pseudo bond. And then you have all the growth of Pendle with bond stripping, which comes from the concept that theoretically you believe that what you're buying is a bond, correct, as a principal plus a yield. For asset management to actually grow, we need everything that is in between those two, which is all the spectrum of alpha. And actually that's the largest part of the market. And you need that because the reality of it is that majority of people do want to get exposure to the long-term success of this market. They just want to do it in a way where they are maybe not facing the same level of risk and volatility. And so products that would fit into that category are still needed. And then from the assets itself, we would need to be able to give exposure to more assets. Majority of the products right now are basically Bitcoin products or Ethereum products or Solana products. The tokenization of equities and debt is now bringing that capacity to build more sophisticated asset management products. I think that if like we could have on-chain something where you have like, I don't know, a combination of equities and Bitcoin, I think people actually would be pretty attractive.
So yeah, I would agree with you that most of the products we see right now are yield orientated, and that space is starting to get a bit crowded. Have you seen anything interesting in the middle of the spectrum? You said it's lacking, but have you seen anyone doing anything interesting there?
I mean, there are definitely some people building some different things. There are some kind of like strategies more geared towards volatility arbitrage, where people are using options markets and liquidity pools to do kind of like mispricing of volatility, which is an interesting concept, and I think you can do it on chain fully, which is also interesting. But then for everything else, I think we're still at the stage where you would use the vaults and the tokenization more as an access point. But to run anything more sophisticated, you would still need to do that in Binance or KeyX or something like that. So at that point, the on-chain vault is more like an interface wrapper to automate fund administration processes, which is already great because they're actually very expensive. And then from there, you would still want to do majority of your executions in a place where you have a large amount of liquidity and variety of assets.
And as far as AI is concerned, I don't know if you've been following the trends there with regards to on-chain asset management. Do you see this playing out in a meaningful way? And are there any examples of AI agents starting to outperform, kind of more traditional methods? Would love to hear your input on that.
I mean, I don't know if I'll perform, and we'll see about that. But I'm very active into within my research team. We also look at and try to keep up to date with all of the new developments in AI trading in general, even more than asset management. I think majority of the innovation in AI trading first comes from prop, correct? I think we're still at the stage where people are not even thinking yet about asset management. They're just thinking, how do we make it work? Like, can you make money with this? It's definitely possible. Like there's no doubt. Even ourselves at Keyrock, we are allocating resources to allow AI engineers to experiment and try to test different strategies. When it comes down to on-chain, it seems that at the moment, the only real tangible use case is concentrated liquidity pool provision. So you would have an agent that understands the restrictions on on a Uniswap V3 style pool, and then it would optimize for width of range, time in range, and I would say kind of like amount of liquidity in range. And actually, because liquidity pool provision overall compared to like traditional market making where you have an order book is relatively slow, correct? Like you only move a range maybe, every few hours at best, it is actually very ideal for a model that just learns and tries to figure it out and fine tune how to open the range, where to open it, when to get out. I do think these models are going to work. There are great companies now building them. So companies like Giza or Theoric or Zero Gravity as well, providing infrastructure for these, are building use cases for that. And I would say after that, then you will have more sophisticated use cases, maybe even funding arbitrage as well, run by agents, but not yet.
That's really interesting. Are you guys utilizing this in-house yet, or are you still experimenting, or?
We're trying. Yeah. So we are in contact with all these companies. We're very close to all of them, and we're trying to figure it out. Pilots with them to test the technology. Very often we have to tell them to go slower. They're startups. They want to go fast. They want to like get money from the public and go out. Well, at the moment our approach is we tell them that we're happy to test all the AI technologies for trading, but only with our prop capital. We don't think it's at the stage where we would want to put it in front of clients.
And at the moment, we're seeing a bit of a split in on-chain asset management between sort of open vault-like strategies, which are verifiable, on-chain, transparent, etc., and more proprietary strategies, which are maybe not open to the public and not as easy to find. How do you see that dynamic playing out over time?
In the theory of trading in general, capacity is the biggest constraint. Like even if you look at traditional finance trading, the capacities are much larger, but they still exist. And not only you have capacity constraints, but also you have diminishing returns. So as you accumulate more assets in a strategy, then your returns will go down. And so even though there is a lot of enthusiasm from a community perspective on openness and sharing, as soon as capacity starts to become an issue, I think it would evolve towards information being closed, because the only way that you can protect your capacity is by not allowing other people to understand what you're doing. Otherwise, the capacity would go down very fast because you just basically get copied really, really, really quickly. We see that in a lot of the early vaults. This happened as well, for example, in Solana, where a lot of the early vaults have been deployed were very successful in the first few months, but it was very evident what they were doing. Like you could like really decipher it, and all of a sudden 3, 4, 5 vaults of other managers would pop up with the exact same strategy, and the whole thing like just gets drawn down to, a yield level that it starts to be just very market average, and it kind of like just normalizes. And so what you want generally is to find a balance between capacity and yield, and so you want to protect your intellectual property. So I actually do think the majority of on-chain asset management in the future would most probably be in some sort of kind of like privacy preserving format when it comes down to the trading strategies.
There's two types of on-chain strategies, right? There's the automated smart contract type where everything is on-chain. There's no proprietary element at all. And there's the part where the execution happens on-chain. The strategy is off-chain. But I think you're also talking about the third thing with privacy, where even the execution is privacy. Is that private?
It should also be. So I think if you have like your compute off-chain and you just go on the chain and you execute, that already helps a lot because it's much harder to understand where it comes from. But very often the strategies are pretty simple actually. So like people can decipher them very quickly, or they can just like follow your trades. So you would need even further ways to obfuscate your trades, or to split them. So for example, you could have the strategy running on chain, and then you would have like a third-party vault, something like a Hidden Road or a Fireblocks wallet that also lets you do some trades on some perpetual markets or on derived options, and so you can see a bunch of on-chain trades, but then you're holding and managing your risk by hedging it against some options, and that you cannot see. So if somebody would just naked replicate what you're doing, it wouldn't make any sense for them, and so you can you can throw them off a bit.
Very interesting. I think we have time to open up for some questions if anyone would like to ask anything. Okay, great. Well, thank you very much, Juan. Very exciting times, and thanks for joining us.